we can upload that in free resource and also in the course content also.
So it's going live.
Yeah. Hello, my dear friends. Hello, my dear students. Very good morning and a warm welcome to all of you guys with respect to discussion about CA final indirect tax laws RTP and also some interesting points on the amendments which are specifically applicable for November 2023 attempt. And I'm sure that most of you guys already know that in May 2023 attempt, significant amendments have come up wherein a lot of interesting points have been covered by ICI with respect to notifications and circulars. But apart from that amendments, my dear friends, let me also tell you that there are some more interesting amendments which have been specifically brought in from November 2023 attempt onwards. Those amendments is what is our major focus, which we'll discuss. And I'll also spend a little bit of time along with the discussion about some interesting elements with respect to the amendments which have been made for May 23 attempt, which are important even now. So even those points, we'll spend a little bit time and discuss, my dear friends. So without any delay, let's start the discussion and move forward. Come on, are you all ready? Excellent. Brilliant, guys, brilliant. Come on, my dear friends, let's go ahead and let's begin, my dear friends. Come on. So friends, first, before I directly get into discussion about RTP of November 23, first let me spend some good time on discussion about amendments which have been brought in, and after that I'll spend some significant time on discussion about RTP also. But first let me discuss the interesting amendments which have been brought, and after that we'll move forward to RTP. Come on, friends. Just 1 second. Yes, my dear friends, get back. Thank you so very much. So friends, now let me share the screen, and I prepared a wonderful PowerPoint presentation with respect to all the amendments for November 23. And with the help of the PPT, what I've prepared, which is really fantastic, let's get some very good clarity on the discussion, my dear friends. Come on, let me proceed. I'll share the screen just a second. Yeah. Yes, my dear friends, my PPT is ready. Are you able to see the screen? Not yet. Just a second. I'm sure now it's pretty much visible, guys. Come on, my dear friends. Let me talk about some interesting amendments which have been specifically brought in CA final GST and also in customs for November 2023 attempt, my dear friends. So without delay, let me go ahead and discuss, my dear friends. Come on, please see that. The first interesting point in the basic concepts, that is, we all know that at the inception of GST, they clearly told on 1st of July 2017, stating that GST is a destination-based consumption tax. That is, the tax will go to that state where goods or services are consumed. So instead of origin-based taxation, we started following the concept of destination-based taxation. And because of this particular concept, my dear friends, there have been some states who have lost revenue on account of introduction of GST. Now, in order to compensate the states who have lost revenue on account of introduction of GST, there was a need to introduce a concept of GST compensation cess. And initially, government told we'll keep this in force for a period of 5 years. When they told that this for a period of 5 years, it is technically supposed to end by 30th June 2022. But that levy and collection is extended till 31st March 2026. This is the first and foremost amendment which has been brought with respect to the concept of GST compensation cess, which is now being made applicable up to 31st March 2026. Next point. Supply. In fact, my dear friends, with respect to supply, we know an interesting point in supply, Schedule 3, which talks about the concept of transactions which are neither regarded as supply of goods nor regarded as supply of services. In the context of transactions which are neither regarded as supply of goods nor regarded as supply of services, in that we have got one very brilliant point called services by employee to employer in the course of employment. What is that language, friends? Services by employee to employer in the course of employment is neither regarded as supply of goods nor regarded as supply of services. Come on, friends, what is that line? Services by employee to employer in the course of employment is neither regarded as supply of goods nor regarded as supply of service. In that context, they gave an interesting clarification stating that perquisites which are provided by employer to employee, which is in terms of the contractual agreement. In that case, my dear friends, GST will not apply. But if it is not as a part of contractual agreement, if it is something which is given over and above the contractual agreement, then definitely GST will apply. Because whatever is a part of contractual agreement, that is very clearly services by employee to employer in the course of employment. There is no doubt in that. Next line. Charge of GST, my dear friends. Some interesting amendment with respect to reverse charge mechanism. And I'm sure most of you guys know that reverse charge mechanism is a very, 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 very important discussion, especially at CA final level point of view, for a simple fact and reason that reverse charge mechanism comes in exam almost every time. Almost what, my dear friends? Every time. Because section 9.3 has got a significant importance at CA inter and CA final level. And as we all are aware, my dear friends, 9.3 talks about what are the list of that notified services which are covered under a reverse charge mechanism. So basically, some types of services are there where supplier is not liable to pay GST, recipient is liable to pay GST. And those are those transactions which are covered under RCM. Clear, friends? Like GTA, recovery agent, insurance agent, so many points you already learned. Sponsorship service. Come on, see. 1-2 interesting amendments. First point. Service by way of renting residential dwelling to a registered person is chargeable under RCM. Here, let me make you recall an interesting concept. Friends, if a residential dwelling is given on rent for residential purpose, then GST will not apply. We know that it is exempt in GST. Residential property is given for residential purpose, it is exempt in GST. Residential is given for commercial, it is taxable in GST. Commercial given for residential, that is also taxable in GST. Commercial given for commercial purpose, that is also taxable in GST. But if a residential property is given on rent for residential purpose, it is exempt in GST. But in this context, one interesting amendment what they brought is that if a residential property is given on rent to a registered person, that transaction is taxable. Moreover, it is taxable under a reverse charge mechanism, provided that property is occupied for a business purpose. Imagine a case where a sole proprietor is a registered person. He has taken one residential property on rent, not for business purpose, but for his personal stay. But clearly for his personal stay, my dear friends. In that case, the provisions of RCM will not come into picture. Because logic is very simple. Reverse charge mechanism will come into picture only when recipient is using the same for the purpose of his business. Clear, friends? So, friends, in case of renting, when RCM will come into picture, in case of renting, RCM will apply. In case of renting of a residential dwelling to a registered person. Next point. In case of GTA, we all know that GTA service is covered under RCM, where recipient is liable to pay GST. And if recipient is not registered, recipient must take registration and pay the tax under RCM. But see the point here. In case of GTA, my dear friends, supplier may opt for a forward charge. In case of GTA, what is the language, my dear friends? Supplier may opt for a forward charge. It is optional and can issue tax invoice at applicable rate of GST. Practically, there is a concept of 12% GST if it is not reverse charge mechanism, and if it is reverse charge mechanism, it is 5% GST. And I'm sure we all know very clearly that whatever tax we pay under reverse charge mechanism, that recipient will technically pay the tax, and after that, again, recipient can claim input tax credits. There is no doubt in that. Next point. See here. RCM provisions as applicable when service is provided by central government or state government. I'm sure we know this point called services by central government, state government, union territory, local authority to a business entity. Correct, my dear friends? Exactly. Services provided by central government, state will also apply to parliament or state legislature and also to court or tribunal. That is, GST is paid by recipient under reverse charge mechanism. Next slide. Exemption from GST. Come on, friends. Some interesting exemptions, and these amendments are brought by May 23 attempt only. But I'm spending some time so that we are fully clear with these points. Services by way of renting of residential dwelling for use as residence, except where the residential dwelling is to a registered person. Next point. Transport of passengers with or without accompanied belongings. I repeat once again, my dear friends, transport of passengers with or without accompanied belongings by air. By what, my dear friends? Air in economy class. What class, my dear friends? Economy class, embarking from. Embarking means starting, or terminating in. That means ending. In an airport located in the state of Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, or at Bagdogra located in West Bengal. This point was there even before also, but the amendment is that they added one word called air in economy class. So if it is business class ticket, it will become taxable. So if a person is traveling from Chennai to Sikkim in economy class ticket, then it is exempt. But if it's traveling from Chennai to Sikkim in a business class ticket, then it will become taxable. But one interesting point is that even though it is economy class ticket, still it is taxable if the above supply of service was supplied by an e-commerce operator. Classic example, Make My Trip, Go Ibibo, they will all come under e-commerce operators. Brilliant point. I'm pretty sure we are clear with this point, my dear friends. And kindly please note that this amendment is not something which has come up for November 23 attempt as such. This was already there for May 23 attempt. But again, I'm discussing so that we are fully clear once again. Next point. Services by way of storage or warehouse of cereals, pulses, fruits and vegetables are only exempt. In fact, earlier there was something called Indigo, unmanufactured tobacco. So many points were there in this. But they removed all the points. And now they made storage or warehousing of what is exempt is only cereals, pulses, fruits, and vegetables. That's it. Clear, friends? services by way of storage, services by way of storage or warehousing of what is exempt, my dear friends? Cereals, pulses, fruits and vegetables. That much is only exempt. Cereals, pulses, fruits and vegetables. That much is only exempt. There's no doubt in that. Cereals, pulses, fruits and vegetables are only exempt. Services by way of storage or warehousing of cereals, pulses, fruits and vegetables are only exempt. There's no doubt in this, my dear friends. Next point. Service provided to central government, state government or union territory for which 75% or more of the expenditure is borne by central government, state government, union territory is exempt. Once upon a time, this point was total expenditure is borne by central government, state government, union territory. But the amendment now that is made is 75% or more of the expenditure. That means what? Simple example. Let us say Shivateja has conducted one GST training to one department of central government, for which payment is made to me by department of central government. And law is telling that service is exempt because, of course, my dear friends, 75% or more of the expenditure is borne by central government or state government or union territory. Next line. Services by way of clinical establishment charging above 5,500 per day for the room to a person is not exempt. In fact, earlier, my dear friends, there was very clearly a concept of services provided by clinical establishment or a clinic or nursing home in a recognized system of medicine is exempt. That means basically not just treatment, but the rooms or the accommodation what we take in the hospitals for purpose of treatment, that service is also exempt. But what they told is that if the room charges are more than 5,000 per day, what is that line, my dear friends? If the room charges are more than 5,000 per day, then there is no question of exemption. It will straight away become taxable. But one special point is that even though it is more than 5,000 per day, still it is not taxable in case where, that room is not a normal room, but it is an intensive care unit or NICU or ICCU. In that case, even though it is more than 5,000 per day, still it is not taxable. Still it is exempt. But normally, if you go to hospital for treatment and the room charge is more than 5,000 per day, then the room charges, whatever is there, that will become taxable. Very, very important point, guys. Brilliant. Next line. Exemption from GST. Recently added exemption. Service by way of granting national permit. It's basically a permit given to the vehicles which travel throughout India, goods vehicles. Services by way of granting national permit to a goods carriage. To what carriage? Goods carriage to operate throughout India or contiguous state. That means from one state to another state. National permit is given to a goods carriage. That service is exempt. Next point. Services provided by Department of Post by way of what, my dear friends? Postcard, inland letter, book post and ordinary post. Services provided by Department of Post by way of postcard. Come on, guys. Services provided by Department of Post by way of postcard, inland letter, book post and ordinary post. And envelopes are weighing less than 10 grams. That service is straight away exempt. Next. Tour operator service, which is performed partly in India and partly outside India. Supplied by tour operator to a foreign tourist. Now, who is a foreign tourist? Who is not normally resident in India and who comes to India for a stay of not more than 6 months for a legitimate non-immigrant purpose. He is not shifting to India. Everybody getting clarity? Exactly. Supplied by tour operator foreign tourist to the extent of value of service related to tour outside India, and exemption will be based on value into number of days outside India divided by total number of days, or 50% of consideration, whichever is lower. Let's take a small example here. So let us say, for example, there is Shivateja. Assume for a second, Shivateja is a foreign tourist. Now there is one tour operator in India who is giving me service. for a vacation. And let us say that vacation is 6 days vacation, of which 4 days in India, 2 days outside India. And the value of service is 1 lakh. Now, how much is exempt is 1 lakh into 2 by 6. 4 days in India, 2 days outside India. 1 lakh into 2 by 6, that proportion will be exempt. Or 50% of consideration, whichever is lower. And we'll divide between India and outside India. One more time I repeat, we'll divide between India and outside India based on number of days, my dear friends, very clearly. And if it is less than 12 hours, we'll take it as half day. If it is less than 12 hours, we'll take it as half day. And if it is more than 12 hours, we'll take it as full day. As simple as that. 12 hours or more, we take it as full day. Less than 12 hours, we'll take it as half day. Very, very interesting amendment. High probability that question may trigger in the examination. Please kindly note this point. Make sense, guys? Wonderful. Yes. Let me move forward to the next point. Withdrawal of exemption. These are all of the points where exemption is being withdrawn. That means they are all what, my dear friends, now taxable. See the first point. Services by a hotel, inn, guest house, club or campsite by whatever name called for residential 1,000 per day or equivalent. Once upon a time, there was a brilliant exemption called if you stay in a hotel where the room rent or the accommodation value is less than 1,000 rupees, it is exempt. This exemption has now been withdrawn. So now, if we go to a hotel and stay in a hotel where the room rent per day is less than 1,000 rupees, even though it is less than 1,000 rupees, still it will become taxable. There is no question of exemption. Next line. In case of GTA, now who's a GTA? GTA stands for Goods Transport Agency. In case of GTA, if the consideration charged for a single carriage, that means single vehicle wise does not exceed 1,500, or per consigned, that means per customer wise does not exceed 750. There was an exemption for this. And this 1,500 or 750 exemption has been withdrawn now. So there is no more exemption of 1,500 or 750. This exemption is gone. Next. Services provided by RBI. Services provided by IRDI. What is IRDI? Insurance Regulatory Development Authority of India. Services provided by SEBI. These are all regulatory bodies. Earlier, once upon a time, if service is given by them, there was an exemption. But now there is no more exemption even if service is given by them. Next point. Services of leasing of assets by the Indian Railway Finance Corporation to Indian Railways. This service is exempt. Services by way of licensing, registration, and analysis or testing of food samples supplied by Food Safety and Standard Authority of India to food business operator. Basically, FSSAI authority gives food license to the food business operator. I'm sure you would have seen on most of food products that there is FSSAI license number. So this service given by the Department of FSSAI to the food business operator was earlier exempt, but now the exemption has been withdrawn. So henceforth it will become taxable. Next. Services provided by GST network to central government, state government, union territory for implementation of GST. This is also gone. This is taxable now. Services by way of fumigation. Fumigation is where smoke is put in the warehouse in order to protect the fruits, vegetables from any kind of pest or any other issues in that particular warehouse. To keep it fresh, they do this. So services by way of fumigation in a warehouse of agricultural produce, this service is now taxable. Services by way of slaughtering of animals. Slaughtering animals is basically killing animals for food. This service is also now taxable. Services provided by cord blood banks by way of preservation of stem cells or any other service in relation to such preservation. What is this cord blood banks? Basically, when a baby is born, the baby is attached to the mother's umbilical cord. And after the baby is born, they cut that umbilical cord and the cord is preserved. And the cord is what, my dear friends? Preserved. and that is basically preserved by this cord blood banks, which is basically used in case where there is a medical emergency for the child. For regeneration of fresh blood, they use this cord. So when service is given by cord blood banks for preservation of stem cells, it used to be exempt earlier, but now it is taxable. Next. Services provided by operators of common biomedical waste treatment facility to a clinical establishment by way of treatment or a disposal of biomedical waste or the processes incidental thereto. And the classic example of biomedical waste is your syringes or any kind of medicine bottles which have already been used. They're all called as biomedical waste, which cannot be thrown here and there. There are people who basically do this activity of treatment or disposal of biomedical waste. So that people, if they were giving service, they used to give service to the hospitals, and that service was earlier exempt, and that exemption is now withdrawn. So the operators of biomedical waste, if they are giving service to a clinical establishment, that exemption is withdrawn, and now that exemption is taxable. Because exemption is gone, so service is taxable. Next point. 1, 2 interesting clarifications, my dear friends. Please see that. Exemption available to educational institution and central and state educational boards for conduct of entrance examination. So basically, services provided by education institution to students, faculty, and staff is exempt. And there is also one point, services by way of conduct of examination, that service is clearly exempt. So exemption available to education institution and central and state educational boards for conduct of entrance examination has been extended to any authority, board, or body which is set up by central government or state government, including National Testing Agency. Including what, my dear friends? National Testing Agency for conduct of entrance examination for admission to education institutions. Clear, friends? So this exemption has been extended to, any authority or board or body which is set up by central government or state government, including the National Testing Agency for conduct of entrance examination for admission to educational institutions. Next slide. Accommodation services. Come on, friends. What services, my dear friends? Accommodation services. I repeat once again, accommodation services provided by Air Force Mess. I repeat once again, friends, accommodation services provided by Air Force Mess and other similar messes such as Army, Police, Navy, paramilitary. They'll have mess, right, where they provide accommodation, food services and all to their personnel would be exempt provided they qualify as service supplied by central government, state government, union territory or local authority. This is an interesting point. One recent clarification, high probability that a small question may trigger in the examination. Next slide. Place of supply, a very, very interesting topic where we have got some interesting sections like section 10 and 11 with respect to goods, 12 and 13 with respect to services. Now, please see place of supply section 12.8. What is section 12.8? 12.8 talks about place of supply in case of transportation of goods, which clearly says that if recipient is a registered person, place of supply will be location of such person. And if recipient is unregistered person, place of supply will be what, my dear friends? Come on, friends. If recipient is a registered person, place of supply is the location of such person. And if recipient is unregistered person, place of supply is the place where goods are handed over for the purpose of transportation. But one special point in section 12.8 is that if the goods are destined outside India, for example, Shivateja is sending goods from India to, let us say, UK. So goods are destined where, my dear friends? Outside India. If the goods are destined outside India, place of supply would be the destination outside India. If the goods are destined outside India, then the place of supply would be destination outside India. And in this context, my dear friends, one interesting clarification what they have given is that the recipient means recipient of service, would be eligible to claim input tax credit if recipient is a registered person. So even though goods are destined outside India, Even though goods are destined, what, my dear friends, outside India, still the recipient is eligible to claim input tax credit. Very, very interesting point. And a latest amendment, extremely important. Just 1 second, my dear friends. Yeah, so that is an interesting amendment in the context of place of supply, which clearly specifies that in case of section 12.8, service of transportation of goods, my dear friends, if the goods are destined outside India, the place of supply is what? Destination of outside India. But they have clarified very clearly that the recipient would definitely be eligible to claim input tax credit if recipient is a registered person. That is a brilliant, brilliant amendment, guys. Make sense, everybody? Excellent. Now see the point. Value of supply. One more interesting amendment. No claim bonus, my dear friends. What is this? No claim bonus. Sir, we all know that insurance companies generally what happens is that they give something called no claim bonus. Now, what is this no claim bonus? This concept is very clear that in case where we have taken some insurance policy, the whole year we have not made any claims, the insurance company a lot of times gives something called no claim bonus. So no claim bonus provided by insurance company is recorded in the invoice and it can be reduced as per section 15.3a, because 15.3a talks about something called discount recorded in the invoice, which can be reduced from value of supply. Second point, any incentive which is paid by Ministry of Electronics and Information Technology. I repeat once again, any incentive paid by Ministry of Electronics and Information Technology to acquiring banks under incentive scheme for promotion of RuPay debit card. Government is actively trying to promote this RuPay debit card. So for promotion of RuPay debit card and low value BHIM UPI transactions would be regarded as subsidy from the government and would not be taxable, because we all know that any subsidies linked to the price will be included in the value of supply except subsidy from central government or state government. So if it is coming from central government or state government, it will definitely not be taxable. And in this case, you have to understand that this is given as an incentive by the Ministry of Electronics and Information Technology for the purpose of promotion of RuPay debit card and low value BHIM UPI transactions. Clear, friends? Excellent. Very good. Next point. One more interesting point in ITC. See this point. If payment is not made by recipient to the supplier within 180 days from the date of invoice, then recipient must repay or reverse an amount equal to ITC availed proportionate to amount not paid to supplier along with interest. We all know this concept. Basically, this is an interesting concept of second proviso to section 16.2. 16.2 is conditions to claim input tax credit. In that, then one point, second proviso, which clearly specifies that if recipient fails to make payment to supplier within 180 days from the date of invoice, then whatever credit is taken to the extent related to amount not paid. For example, 50% is paid, then reverse 50% credits. 30% is paid, then reverse 70% credit, because 70% is not paid. So whatever related to proportionate amount not paid, that has to be reversed along with interest. But of course, we all know that it can be reclaimed when payment is made again to the supplier. Next point. In case of banking company and financial institution, we know this concept called common credit. Rule 42 in case of apportionment between inputs and input services. Rule 43 in case of capital goods. But in case of banking company, what they told is that instead of doing this apportionment, applying rule 42 and 43, do one thing, take 50% credit, reverse 50% credit. Matter is over. Out of common credit, take 50%, reverse 50%. This option is given to banking company and financial institution. But if they exercise this option, in middle of the year, they can't reverse it. That is important. Getting the point, everybody? Friends, come on, please reply. Excellent. Come on, see that. In case of banking company and financial institution, they have an option to claim. What they have, my dear friends? They have an option to claim 50% of common credit. I repeat once again, they have an option to claim 50% of common credit and reverse balance 50% of common credit. However, they can't claim credit of ITC related to personal use and block credit. Whatever is related to personal use, whatever is related to block credit, that you anyways can't claim. So let us say if 100 rupees is total credit, out of 100, 20 is related to personal and block. Forget that 20. And let us say some 10 is related only towards taxable. In case of taxable and exempt, they told don't bifurcate. Don't bifurcate. Then whatever is the balance common credit, out of that take 50%, forget 50%. That's a straight point. You need not apply rule 42 and 43. This is one interesting point given to banking company and financial institution, which is purely optional. Next. New rule 37E. If supplier has filed GSTR 1, friends, I'm sure everybody knows what is GSTR 1, GSTR 3B. Already you would have done a lot about GSTR 1 and 3B in articleship also. GSTR 1 is a statement of outward supply, but 3B is a summary return. A person can file GSTR 1 even without payment of tax, but GSTR 3B cannot be filed without payment of tax. Correct? And I'm sure you also know that current month GSTR 1 cannot be filed unless previous month 3B is filed. They made it very strict practically now. It's not coming also. If you want to file current month GSTR 1, it is clearly showing up a pop-up. Last month 3B is pending. Government logic is simple, boss. If you keep on filing GSTR 1, but if you don't file GSTR 3B, how will government get revenue? Because logic is simple, no? Because one is only what? Statement of outward supply. If supplier files GSTR 1, credit will auto-populate to recipient in GSTR 2B. On the basis of GSTR 2B, will take credit. And I'm sure everybody knows that. Everybody, I'm sure we know the CFNL students, man. How can a CFNL student tell, I don't know this? CFNL student, man, I'm sure you guys know this concept that if supplier files GSTR 1 within the due date, that is 11th of next month, or QRMP case 30th. If supplier files GSTR within the due date, then the credit will reflect to the recipient in GSTR 2B and also in GSTR 2A. But if supplier files after the due date, credit will reflect only in 2A but not in 2B. But the logic is very simple. Your input tax credit is supposed to be claimed clearly based on credit that is reflecting in GSTR 2B, which is a very, very interesting point to be noted. Get back now. So if supplier has filed GSTR 1, I repeat once again. If supplier has filed GSTR 1 but does not furnish GSTR 3B for the tax period, till 30th September, following the end of financial year. Following the end of what, my dear friends? Financial year. Then ITC shall be reversed. ITC shall be what, my dear friends? Reversed by the recipient on or before 30th November. Obviously, no, my dear friends, supplier has filed GSTR 1, but he did not furnish 3B for the tax period till 30th September following the end of financial year. Then ITC shall be reversed by the recipient on or before 30th November. And it can be reclaimed after supplier furnishes GSTR 3B. So after supplier furnishes GSTR 3B, recipient can reclaim the credit. Not that credit is gone forever. He can reclaim. Next slide. This point, I just told you this. That recipient can claim credit only and only if the credit is reflecting in GSTR 2B. And credit will reflect in GSTR 2B only if supplier files GSTR 1 within the due date. So if credit is not coming in 2B, government is telling, my dear friend, it is your responsibility to follow up with your supplier and ensure that supplier files GSTR 1. Then credit will reflect in 2B and then you claim your credits. As simple as that. Next one. Time limit. Time limit for availment of ITC. Time limit for availment of ITC by a registered person in respect of any invoice or a debit note pertaining to a financial year is extended up to 30th November of the following financial year. I'm sure everybody knows this. I did not stress on this point, but before there was a concept called there's a time limit only till due date of return for September month following the end of financial year or a date of filing annual return, whichever is earlier. But amendment has been brought in this where they clearly told in order to avail the ITC, the time limit is extended up to 30th November. A very brilliant point. Next. Registration. enhanced threshold limit of 40 lakhs for registration available to persons exclusively engaged in making supplies of goods is not made applicable to supplier of fly ash bricks, blocks, building bricks, bricks of fossil means, earthen or roofing tiles. This is already brought as an amendment in May 23 attempt itself, but important for November also. That's why I brought this in PPT. Now, an interesting point here. We all know that there are three categories what we divide for registration limit. First category, Manipur, Mizoram, Nagaland, Tripura, 10 lakhs, whether you are doing in goods or service or both. Next, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana, 6 states. Goods or service or both, it is 20 lakh. Any other state, exclusively goods, 40 lakh. Only service, 20 lakh. Both, again, 20 lakhs. But 40 lakh limit will not apply to some products like pan masala, tobacco substitutes, ice cream and other edible ice, whether or not containing cocoa. And it will also not apply to fly ash bricks or blocks, building bricks, bricks of fossil meals, earthen or roofing tiles. So if somebody is engaged in these products also, any of this product, my dear friends, then the 40 lakh limit will not apply. So if 40 doesn't apply, what will apply? 20 lakh will apply. But of course, for Manipur, Mizoram, Nagaland, Tripura, the limit is just 10 lakhs only for registration. And when I say limit, what is that limit? Aggregate turnover, defined by section 26, which covers all taxable supplies, exempt supplies, interstate supplies, and exports on all India basis under the same PAN. Next slide. TDS or TCS registrant is also eligible to apply for cancellation of registration. Any person who has got registration, my dear friends, and if you want to apply for cancellation, we all know that a person can voluntarily apply for cancellation or an officer may cancel suo moto if we have done some violation. And earlier, the person who was registered only for the purpose of TDS or TCS, he was not eligible to apply for cancellation. Now they brought amendment saying that TDS or TCS registrant is also eligible to apply for cancellation of registration. Next line. Registration is liable to be cancelled. Who will cancel? Proper officer, where a composition taxpayer, I repeat once again, a composition taxpayer fails to furnish return. Fails to what, my dear friends? Fails to furnish return for a financial year beyond 3 months from due date. And what is the due date for composition registered person? By 30th April following the end of financial year. And any person other than composition taxpayer fails to furnish returns for such continuous period as may be prescribed. And monthly return filer fails to file return continuously for 6 months. If you don't file returns continuously for 6 months, my dear friends, practically also they cancel this a lot. Very crazy point practically. Next point. A person opting for QRMP. What is QRMP? Quarterly return, monthly payment. A person opting for QRMP fails to file return for 2 tax periods. That means technically for 2 quarters. Next. Tax invoice, credit note, debit note. E-invoice is made mandatory for all registered business with aggregate turnover in any preceding financial year starting from 17-18 onwards is greater than 10 crores. In fact, let me tell you, practically this limit has become 5 crores only. In fact, let me tell you honestly that practically this limit has become 5 crores. But for exam point of view, for November 2023 exam point of view, the limit is 10 crores. I'm sure we are very clear with what I'm saying. Good. Next slide. Tax invoice, credit note, debit notes. Time limit for issuance of credit note in respect of any supply made in a financial year is extended up to 30th November of the following financial year. So up to 30th November, they gave time with respect to issuance of credit note. Next point. If a taxable service is supplied through e-commerce operator or supplier of OIDER services, what is OIDER? Online information database access and retrieval services. Example, Amazon Prime, Netflix, we all know this. To unregistered recipient, then the tax invoice must contain the name and address of recipient, PIN code, and the name of the state, irrespective of value of supply. This amendment is brought because earlier this was required only when the value is more than 50,000. But now they are telling, irrespective of value of supply, please mention that. The reason being very clear that GST is a destination-based consumption tax. So where the goods or service is consumed, that state should technically get the revenue. And they were not able to identify which state it is going when the invoice is not mentioning the name of the state. That's why they told it mandatory that you please mention the name and address of recipient, PIN code, and name of the state, irrespective of value of supply. Interesting amendment. Next. Accounts and records and e-waybill. E-waybill is to be generated for transporting imitation jewelry also. This amendment is important because e-waybill is not required to be generated in case of jewelry normally. But they have clarified that in case of imitation jewelry, e-waybill is required. Next line. Payment of tax. Deposit in cash ledger can be made through UPI and also through IMPS. But practically that is not working. But that concept they are going to introduce very, very soon. And facility is provided on GST portal to transfer any amount available in electronic cash ledger under CGST Act to electronic cash ledger for central tax or integrated tax of a distinct person. Distinct person is a case where GST number is different, but the PAN is same. Make sense, guys? And this facility is only to transfer the balance in electronic cash ledger, but not the balance in electronic credit ledger. Credit ledger, you can't play however way you want. Cash ledger only, you can transfer. Next line. Returns. Maximum late fee for annual return. Annual return is filed in which form, my dear friends? GSTR 9, annual return. And GSTR 9C is reconciliation statement. And GSTR 9 is mandatory to be filed by every person whose aggregate turnover is more than 2 crores. See now, what is the late fees now? If turnover does not exceed 5 crores, the late fees is 50 per day. 50 means 25 plus 25. CGST, SGST. 50 per day or 0.04% of turnover. It's not 0.4. It's not 0.4. It is 0.04% of turnover, whichever is lower. And if turnover exceeds 5 crore, but does not exceed 20 crore, 100 per day or 0.04% of turnover, whichever is lower. And if turnover is more than 20 crores, 200 per day, which is normally there in the law, 200 per day or 0.5% of turnover, whichever is lower. So this is the amendment that is brought with respect to maximum late fees in case of annual return. Next point. Section 37 has been amended to provide extended time limit up to 30th November. Already we know this. With respect to claiming of input tax credit, reporting of credit note, and also if any mistake is there in GSTR 1, we can rectify that mistake in GSTR 1, not by filing revised GSTR 1, but in amendment column in GSTR 1, next month we can show that. But we have time only till next year up to 30th November. And after that, you cannot do any change. Time is over. Next. If there is difference between GSTR 1 and GSTR 3B, what is that line, my dear friends? If there is difference between what? GSTR 1 and GSTR 3B. So in 1 and 3B, there is a difference, my dear friends. What happens is very clearly, taxpayer will be intimated to explain the difference. You please tell why there is a difference. Taxpayer will be intimated to explain the difference or pay the differential tax within 7 days. You please tell why difference is there. Or you please pay the amount within 7 days. Make sense, guys? Good. Next point. Some interesting amendments in refunds. CFNL specific topics. Unregistered person can also apply for refund by taking temporary registration on the GST portal and by submitting all documentary evidences, because ultimately, my dear friends, there is something called principle of unjust enrichment. That means basically it is always believed that the tax burden has been passed on to the end consumer. So finally, the person who has borne the burden of tax should only be eligible to claim refund. And the relevant date for filing refund is from the date of receipt of goods or services or both by such person. And this relevant date is important because application is to be filed within 2 years from relevant date. And the date of issuance of letter of cancellation, date of issuance of letter of cancellation for supply by supplier will be considered as date of receipt of services by applicant. Logic is simple. There is one supplier. I'm an unregistered person. He collected GST from me and he paid to the government. And for some reason, that transaction is cancelled. But he already paid GST to government. But how can he claim refund? The refund should come to me, no? Because I'm an unregistered person. I have borne the burden of the GST. The brunt of the GST is borne by Shivateja. So Shivateja should be eligible to claim refund. But to be eligible to claim refund, I should be able to make an application on GST portal. For that person, they brought amendment saying that unregistered person can also apply for refund by taking temporary registration on the GST portal. by taking temporary registration on the GST portal and by submitting all the documentary evidences. Then only that can be done. Clear, friends? Make sense? Good. Fantastic. Let me go ahead. Next topic, appeals and revisions. In case of appeal filed against the order of adjudicating authority, first appellate authority is what? First is appellate authority. Correct, no, friends? Friends, come on. Then it is appellate tribunal, then High Court, then Supreme Court. There was a requirement to submit certified copy of the order. And now what they have specified is that the said requirement has been removed if the order is uploaded on the common portal at the time of submission of appeal. And one more point is that appeal filed before first appellate authority can be withdrawn. Once the application is filed, it can be withdrawn also subsequently, guys. Next point. Some miscellaneous provisions. Competition Commission of India, CCI. Competition Commission of India has replaced National Anti-Profiteering Authority for anti-profiteering complaints under GST law. Logic is simple. If a customer is being suffered because of any issue, be it GST also, then Competition Commission of India will come into picture. A classic example, let us say there is a GST rate of 12%, but supplier is charging 18% GST. That means very clearly customer has suffered. So Competition Commission of India will come into picture and take action against that basic supplier. Next. Some interesting amendments in customs and foreign trade policy. First point, in customs, they have notified some rules called customs assistance in value declaration of identified import goods have been notified. And in that rules, there is no great topic as such, but what they told is that they have been notified to ensure that value of imported goods is correctly declared. Because a lot of times importers try to tinker with the value of imported goods so that they pay less customs duty. That is where what they told is that board, that is CBIC, can specify additional obligations on the importer to substantiate the price of imported goods. So board has been given power by virtue of this rule specifying that you satisfy this condition. Only then we will say that this value is correct. Only then we say that this value is acceptable. Next slide. Government is in process of implementation of concept of electronic credit ledger in customs like GST. Very clearly, they are bringing this process of electronic, what, my dear friends? Credit ledger in concept of what? Customs, same like your GST. There is no doubt about it. The whole logic is, as long as this credit ledger, cash ledger system is working, my dear friends, it becomes more simple and convenient and easy for the mode of operations. Clear, my dear friends? And electronic cash ledger also is being brought in customs, so as to ensure that it becomes more convenient and easy. In fact, the point to be noted is electronic cash ledger only in customs. Clear? Because whenever we pay BCD, that we can't take it as credit as such. But there's a possibility of something called scrips. You would have heard that concept of scrip in, what is that word? Foreign trade policy, my dear friends. Next. FTP 2023. Before I proceed, I'll tell you 2 points here. Point number 1. Foreign trade policy 2015 to 2020 and FTP 2023, all the concepts of EOU, EHTP, BTP scheme, advance authorization, duty-free import authorization, export promotion capital goods, EPCG scheme, all these are same to same in FTP 2023, subject to 1-2 changes what they have done. That 1-2 changes is what I'll discuss now. But rest all things in FTP 2023 is one and the same. Please see that. There is a change in the concept of status holders. Export performance is necessary in the current year and preceding 3 financial year. And it is counted on the basis of FOB of export earnings, that is free on board. 1-star export house, $3 million USD, 3 million USD. 2-star, 15 million USD. And 3-star, 50 USD million. 4-star, 200 million USD. 5-star, 800 million USD. This is the interesting amendment brought in FTP 2023. Earlier it was 3, 25, 50, 500, 1,000. The story was different altogether. But now it is what? 1-star is 3 million USD. 2-star is 15 million USD. 3-star is 50 million USD. 4-star is 200 million USD. 5-star is 800 million USD. Next point. One interesting scheme called Scheme for Remission of Duties and Taxes on Exported Goods, that is RODTEP scheme. This has basically replaced one scheme called MIS, Merchandise Export from India scheme. Concepts are one and the same, but they change the name to Remission of Duties and Taxes on Exported Goods. And this scheme aims to refund the duties and taxes borne on exported products. And what they're trying to say is that rebate is issued in the form of scrip. So scrip is like a coupon or voucher. You can call it as a coupon or voucher, a scrip which is freely transferable. And what you can do with that scrip, for example, let us say Shiva Teja has made exports of, let us say 10 lakhs. And on that goods, what I exported, I already suffered some taxes and duties in India to the extent of 1 lakh. Let us say government is telling 70% I'll give the value as scrip. That means 70% of 1 lakh is how much? 70,000. This scrip, I can use it for payment of customs duty when I do further imports. Now you might get found out, sir, what if you don't do further imports? Then that scrip can be sold in the market. Scrips are freely transferable. Such scrip can be used only for payment of BCD. And scrip would be based on percentage of FOB value with a value cap per unit of eligible exported products. It is not fixed in the policy in terms of which product, how much is the percentage. That is practically being followed. You need not learn which product, what is the percentage. That's not there in your syllabus. Don't worry. Clear, friends? That's it. Thank you so very much. So, friends, these are the interesting and wonderful amendments which have been specifically brought up for November 2023 attempt. And before I spend some time on RTP of November 23, I wanted to spend time on this so that we both are on same page with respect to amendments, and we are very clear with amendments, and we are ready with all the points in the mind so that we perform extremely well in the examination. Clear, friends? So without any delay, now let me spend some good time with you guys on discussion about RTP also. Let me open the page and then I'll share the screen. Just a second. Good. RTP of November 2023. Come on, my dear friends, let me proceed. I'll share the screen. I'm sure the screen is visible for everyone. So this is basically the RTP of November 2023, which we are going to spend some good time with you now on discussion about this RTP. And I'm sure we all know that RTP contains always some interesting questions. A lot of times there is a possibility that a small question may trigger in the similar fashion in the examination. Now, the point to be noted is very clear that in the examination pattern, we always have a case study based MCQ. And after that, we'll have some independent MCQs. Then we'll have some 14 marks question, which contains entire concept combining value of supply, input tax credit, and also the reverse charge mechanism concept. Then we'll have all small questions, which is not a big deal as such. Clear? Come on, let me proceed. Let me start the discussion. First question, which is a case study based MCQ. Let's start, guys. First one, go on. Infotel Limited, hereinafter referred to as Infotel, is a telecommunication company operating in India. Very good. Company has obtained registration in all the states in India. Please note that they have got registration in all the states in India and has its head office in Haryana. Head office is in Haryana, but they have got registration in all the states. Invoice for a telecommunication service in India is issued to the customer by head office located in Haryana for all the services. During the month of January, following transactions were undertaken. Lot of story they'll give, but you have to focus on whatever is relevant for you. And based on that, we'll answer them. Receipts from postpaid mobile customer 25 lakhs. 5 lakh is from customer located in Haryana, and remaining amount is from customers located in rest of India. Okay, very good. 25 lakhs. Apart from this, Infotel also collected an amount of 20 lakhs as subscription income identifiable separately on the post-paid bill from the customer. And this amount is not included in collection at point number 1. Very good. And the same was collected for payment to CloudZone, an online content provider platform located in Maharashtra. A lot of times in Jio, they give Netflix subscription. You know this, no? Jio, they give Netflix subscription. Whatever amount they take from customer, they give it to Netflix only. Indirectly, they are acting as something called pure agent. Clear, friends? See now, the same was collected for payment to CloudZone, an online content provider OTT platform. Full amount was remitted to CloudZone by Infotel on behalf of post-paid customers. Getting clarity, everybody? Next. CloudZone issues invoice to the customer. CloudZone issues invoice to the customer in its own name. That means very clearly, this turnover will not be a part of turnover of Infotel, because this will not come in that category of schedule 1. Supply of goods by principal to agent or vice versa. And as per the agreement, Infotel is not involved in any sort of facilitation or arrangement of supply from CloudZone to customer. Very good. And the customer on their own availed the facility to pay for the services provided by CloudZone by way of payment through Infotel. Subscription income is charged from customers on actual basis and no fee is charged by Infotel. That means there is no markup. All these points clearly shows that they're acting as a pure agent. Infotel receives an amount equal to 10% of total amount collected from customer as collection charges from CloudZone. What they have collected, my dear friends, 20 lakh. On 20 lakh, 10% is 2 lakh. That is like their commission income. Next point. Direct receipts from prepaid mobile customers are 50 lakhs. Entire payment is received from customers located outside Haryana. Very good. Next point. Mobile telecommunication revenue received from PayQuick Limited, hereinafter referred to as PayQuick, a reseller or selling agent of Infotel, who is a reseller of Infotel, is how much, my dear friends? 30 lakh rupees. And the location of PayQuick is in Maharashtra. And the commission paid to PayQuick is 10% of revenue received. So the 10% is the commission what is paid to PayQuick, and PayQuick will charge GST on that 10%. That will take it as input tax credit. But on 30 lakhs, Infotel has to pay GST. Infotel collected an amount of 5 lakh rupees from customers located in Haryana against DTH service provided in Haryana. And this includes a one-time installation charges of 50,000. So what? Still it is taxable. Next. Infotel purchased certain equipment for installation of its towers in the state of Rajasthan. And the goods were delivered and installed by the supplier at Infotel's site in Rajasthan. And invoice was issued to Infotel at Haryana's head office. Total amount charged is 75 lakh. My straight answer, the credit is blocked. Because as per section 17(5), in case of goods or services or both, for construction of immovable property, credit is not allowed. But if it is plant and machinery, credit is allowed. But the problem is plant and machinery excludes 3 points. Number 1, land, building, civil structure. Number 2, telecommunication towers. Number 3, pipelines laid outside the factory premises. So in case of telecommunication towers, input tax credit is not allowed. Next line. Infotel collaborated with Amazing, a company based in USA, for receiving technological support in relation to provision of cloud storage services to its customer. And the amount paid by Infotel to Amazing is 5 crores for technology support. Wonderful. Further, the cloud storage services were provided by Infotel to its unrelated premium customers on free of cost basis for trial period. If it is free of cost, then obviously it is not regarded as supply. Because no consideration, no supply, unless the transaction is covered in section 7(1)(c), permanent transfer or disposal of business asset on which ITC is claimed. But this is not like that. Next point. As per agreement with Amazing, in case of failure in provision of cloud storage services to customer by Infotel, Amazing shall provide backup server access to Infotel customer for a data storage. And customer is not aware of the fact that data is being stored on Amazing server. In case of failure at Infotel's end, Amazing charged an amount of how much, my dear friends? 50 lakh from the Infotel, for instance, in the month of January. Very good. They will charge GST, will take in ITC. All the amounts given above are exclusive of GST unless otherwise provided. And the opening balance of ITC for relevant tax period is nil. And the GST applicable is interest rate 9%, interest rate 9%, interest rate 9%, 9%, interest rate 18%. Assuming that there is no other inward or outward transaction in the month of January, and based on the facts given above, choose the most appropriate answer. First question. The GST payable in cash for the month of January by head office of Infotel in Haryana, assuming no ITC is utilized. Wow, such a simple question. They are telling, assuming that no ITC is utilized, assuming that what? No ITC is utilized, please tell what is the amount of GST payable in cash. And they didn't even ask breakup between CGST and SGST. Let me go back. So what is that you are required to pay GST on? 25 lakhs you have to pay GST. Yes. Next. 25 lakhs you have to pay GST. And apart from that, on this 20 lakh, 10% is 2 lakh. On that you have to pay GST. 50 lakh you have to pay GST, prepaid customers. And this 30 lakh we have to pay GST. Yes. DTH service 5 lakh, this also we have to pay GST. Correct, no, my dear friends? But there's one crazy point called, in case of this 5 crores and this 50 lakh, my dear friends, supplier is located outside India, receiver is located in India. This transaction will come under reverse charge mechanism. So on that also GST will apply. So let me open an Excel spreadsheet and explain that to you. Just give me 1 minute. Yeah, let me go ahead, guys. Let me share a different screen now, and let me share the Excel once again. Come on, good. Excel is visible now? Yes, fair enough. So we observe the question very clearly. What is that they have charged in case of postpaid customer? In case of postpaid customer, how much they have charged, my dear friends? 25 lakhs is what they have charged. Correct? And they have also got commission income of how much? 2 lakhs. And from prepaid customer, once again, let me go and check back how much they have charged from prepaid customer. From prepaid customer, they have charged 50 lakh rupees. Correct, my dear friends? And amount from Pay Quick, how much they have got is 30 lakh rupees. That is also there in the question itself, my dear friends. Apart from that, what they have got 5 lakh rupees in relation to DTH service. And with respect to RCM, my dear friends, that is with respect to service taken from Amazing, that is 5 crore one transaction, 50 lakh one transaction. So the figure is 5 crore 50 lakhs. Total figure is 6 crore 62 lakhs and GST at the rate of 18%. It is coming to 1 crore 19 lakhs 16,000. What's the GST liability, my dear friends? The GST liability is very clearly 1 crore 19 lakhs 16,000 with respect to this question number 1. Making sense, my dear friends? Because they clearly ask the question, what is the GST liability in case where entire amount is paid through cash and no ITC is utilized? Come on, let me go back to the sheet. Once again. Yes. Come on, now what is question number 2? What is the input tax credit available to Infotel in the month of January? It is head office. Come on, friends, what is the input tax credit available? Let me again go back to the Excel. What is the input tax credit available? They are talking about ITC available. The point is very clear that there is some commission which is charged by Pay Quick. How much they have charged? 30 lakh rupees into 10%. That means technically they have charged 3 lakh rupees. And RCM, whatever GST we pay, that also will take it credit, my dear friends, which is 5 crore 50 lakhs. Correct, no friends? Total is this figure, and GST at the rate of 18%. On 5 crore 53 lakhs, 18% is coming to 99 lakhs 54,000. That is the credit that will be available. In fact, a pretty simple question, not at all a discomfort. Clear, friends? So when I say the answer is 99 lakhs 54,000, answer is option A, my dear friends. Clear, everyone? 1 second, guys. This laptop got stuck again. Just a second. Yes. So the answer for the input tax credit that can be claimed is how much, my dear friends? 99 lakhs 54,000. That is very clearly option A, my dear friends. Good. I'm pretty sure that we are getting good clarity on this by seeing the working in Excel, my dear friends. Fair enough. Come on, let me get back. Question number 3. In terms of GST law, please select the correct statement for transaction between Infotel, CloudZone, and subscribing customer. Infotel is an agent of CloudZone. Infotel is a pure agent of CloudZone. Infotel is a pure agent of subscribing customer. Infotel is an intermediary of CloudZone. 101% the answer is Infotel is a pure agent of subscribing customer. No doubt in that. By going through the question itself, we understood this part already. Next point. Jurisdictional authorities are contemplating to bring Amazing under the tax net for transaction related to cloud storage. Why not required? It is already covered under reverse charge mechanism because recipient is a business entity who is taking the service in the course of business. Amazing is liable to obtain registration? No. No. Intermediary? No. Amazing is not liable to obtain registration and pay tax in the respect of said transaction. Obviously, because this transaction is covered under RCM. Next point. For direct-to-home services, Infotel is exploring the possibility of providing equipment like dish, antenna, and cables liable to GST at 28% to the customer at an additional charge of 2,000. Very good. And currently, the company collects 1,000 from new customer as installation and one-time charges for services liable to GST is 18%. In this case, the dish, antenna, and cables are also provided, and the combined charge is 3,000. Wonderful. 2 or more supplies are given together. And let me tell you, this is not a mixed supply. This is clearly a composite supply. Because practically, that is how they are naturally bundled. At home also, when we take service of DTH connections and all, what happens is very clearly, he is basically giving that service. But for the purpose of giving that service, he bring that boxes of dish, antenna, cable, and all, he put it. Where service is predominant and the antenna and cable are only ancillary. So we'll charge GST only at the rate of composite, we'll charge GST at the rate of principal supply, which is nothing but 18%, my dear friends. So answer will become option C. GST on 3,000 shall be charged at the rate of 18%. Next line. Guruji and Associates is engaged in retail business. Wow, see that point. That means case study MCQs is over. Guruji and Associates engaged in the retail business of selling wedding outfits in the state of West Bengal. Brilliant. It has affected supplies to customers in the state of Uttar Pradesh and Haryana. Its total turnover is 15 lakhs. Owing to low profit margins in business, it decided to shut down the business in the next financial year. Very good. Proper officer has collected evidence of interstate supply of wedding outfits. Oh my God. If you are doing interstate supply of taxable goods, then registration becomes mandatory. Now, PO wants to make assessment as it was liable to obtain registration but did not get registered. Obviously, you are required to assist the PO by determining which assessment to be done. Self-assessment? No. Provisional assessment? No. Section 60? No. Assessment of unregistered person? Definitely answer is yes. Section 63, best judgment assessment. 60 provisional assessment, 61 scrutiny of returns, 62 BJA, and 63 is BJA for unregistered person. So answer is option C, my dear friends. Next one. Lala Pedewala owns a famous sweet shop located and registered under GST in Vrindavan, Uttar Pradesh. He received order for 100 kg of sweets on 2nd May from Parinde Travels Private Limited located in the same locality of Vrindavan and registered under GST for a consideration of 50,000. Complete order of sweets was delivered on 5th May, but without invoice. Oh my God. As accountant was on leave that day. However, invoice was raised on 6th May when accountant joined and payment is received on 7th May. They're asking what is time of supply of goods. That means very clearly they are treating here sweets as goods. In case of goods, section 12.2, my dear friends, time of supply is very clearly the date of invoice. And the date of invoice will be actual date of invoice or last date when invoice is ought to have been issued under section 31, whichever is earlier. And in this question, the actual date of invoice is 6th May, but invoice is ought to have been issued on 5th May when goods were supplied. Because of section 31, invoice is supposed to be issued at the time when movement of goods is started. Where there is a movement of goods on or before date of delivery, invoice must be issued. Clear, my dear friends? In case where there is a movement of goods, very clearly, my dear friends, when the movement of goods is done, that time invoice is supposed to be issued. So answer is very clearly 5th May. Are we clear with this point, everybody? Come on, please reply. Everyone, my dear friends, come on, please reply. This is an interesting question on the concept of time of supply. Next point. Countervailing duty, CVD, under section 9 shall not be levied unless it is determined that subsidy provided by exporting country, basically anti-subsidy duty, which is given only to the specific kind of manufacturers in the foreign country, so as to ensure that the goods will come to India at a less price. And Indian market is terribly being suffered. So for that purpose only they charge anti-subsidy duty, where the subsidy is given only to some specific persons. Relates to export performance, yes, of course. Relates to use of domestic goods over imported goods in export article. Relates to use of domestic goods over imported goods in export article. Yes, true. It's conferred on all persons engaged in manufacture. No. If it is given to all, then we don't charge anti-subsidy duty. So answer is only 1 or 2. If it is 1 or 2, the answer is option D, my dear friends. 1 or 2. Next point. Swadeshi enterprise exported goods having FOB value 20 lakhs. All industry duty drawback on export of these goods is 5%. And 5% of 20 lakhs is 1 lakh. And the market price of the goods is 80,000. Oh my God. In this case, let me tell you, my dear friends, there is no question of drawback. Whenever the market price, basically, if the market price is less than the amount of drawback, then the drawback is not allowed at all. So Swadeshi enterprise is not entitled to drawback since market price is less than the amount of drawback. Answer is option C, guys. Which of the following statement is correct? For destroyed goods. Destroyed goods, it is applicable in case of total loss if the same can be recovered. Okay. Provisions are also applicable if the goods are lost due to pilferage. No, man. These provisions of the provisional section are also applicable even if goods are destroyed at warehouse. Yes. Section 23, that is remission, will apply even in case where goods are destroyed at warehouse. So answer is option C, my dear friends. Again, so many questions. Answer is option C here. Good. Very good. And that is the end of story for MCQ, which is a case study based MCQ and also independent MCQs. And I'm sure we got a good clarity on the multiple choice questions which are given in this RTP. Let me proceed now. Sudarshan Limited, registered supplier under GST in the state of Kerala, is engaged in providing bouquet of goods and services, varieties of goods and services, other than renting of cars. Renting of cars is not doing. It provides the following information. Distributed, what my dear friends, 1,000 free gifts, electronic items worth 5,000 each, purchased from unregistered local vendors to its customers in Kerala in the month of Jan to promote sales. If it is free of cost, when there is no GST at all. Next line. Supplies a consignment of goods in territorial waters. And the said territorial waters is located at a distance of 11 nautical miles from the baseline of Kerala, 12 nautical miles from the state of Tamil Nadu. And we'll always consider nearest baseline, which is nothing but Kerala. So place of supply will become Kerala, my dear friends. And the value is 6 lakh. On that we'll charge GST. Advance received during the month for future intrastate supply, 7 lakh. and advance of 2,10,000 was related to supply of goods and rest was related to services. Very good. We'll charge the GST because in case of services, at the time an advance is received, that time itself GST will apply. Next point. Provided pure labor services for construction of single commercial unit located in Mumbai and not forming part of any residential complex. Still the answer is taxable because exemption is only when pure labor services for construction of single residential unit is exempt. If it is commercial unit, it is definitely taxable. See, such a small point, but they played in the exam. The answer is completely changing on this word called commercial. If it is single residential unit, then it is straight away exempt. Next, monthly rent paid to Kerala government for an office taken on rent, that is taxable. Moreover, it is taxable under a reverse charge mechanism where we'll pay the tax and claim input tax credit. Because RCM, we all know that we have to pay the tax and then claim credit. Purchase raw material from Saksham Steels registered in the state of Andhra Pradesh. Okay. Purchase a new truck from dealer for transport of materials. Very good. Next point. During the course of arranging and filing documents, accountant of Sudarshan observed that an invoice for 96,000 dated 2nd December was omitted to be recorded in the books of account and no payment was made till the end of Jan. And what is that invoice? Invoice was issued by Rishi of Kerala, from whom Sudarshan has taken cars on rental basis. Oh my God, renting of cars. And recipient is a company. And invoice includes cost of fuel also. That means this transaction is covered under RCM. And let me tell you, even though we pay tax under RCM, still ITC is not allowed. Because in case of renting of cars, input tax credit is allowed only if a person is in same line of business. And what will become time of supply for this? No payment is made till the end of Jan. That means payment is made on 1st of February. And in case of service covered under RCM, my dear friends, time of supply is the date of payment or 61st day from date of invoice, whichever is earlier. So time of supply will become 1st of February. So this transaction will have an effect in February, but not in Jan. All this data is related to Jan only. Yeah, good. Next. Second point. Availed service of arbitral tribunal worth 7 lakh to settle a case related to Companies Act. Very good. This is taxable. And moreover, this 7 lakh, my dear friends, what is the story, my dear friends? Arbitral tribunal, this will be covered under RCM and this will be eligible for input tax credit also. Next. Company claimed depreciation and income tax on the new truck purchase, including all applicable taxes. Oh my God, dangerous point. If depreciation is claimed on tax component, then very clearly input tax credit is not allowed. Because section 16.3 clearly specifies that in case where a machine is purchased and whatever is the GST component is there, on the GST component also if credit is claimed, then there is no, on the GST component also depreciation is charged, then there is no question of giving input tax credit. Very, very important point. Next slide. Saksham Steels, we purchase some raw material from Saksham Steels, no? Yes. Is mandatory required to issue e-invoice. However, it did not issue e-invoice with invoice reference number. Oh my God. If there is no IRN, my dear friends, then that is not a valid invoice and recipient cannot take input tax credit. Very, very dangerous point. And the turnover for previous financial year is 180 lakhs. Very good. And the rate of GST, why they gave 180 lakhs means the logic is very simple because arbitral tribunal, that case RCM will come into picture now. Rate of CGST, SGST, IGST are 9,918 for both inward and outward supply. All the amounts given above exclusive of taxes. Pretty simple question. You are required to compute minimum net GST payable in cash. We'll calculate output tax, we'll calculate input tax credit, but you have to ensure that whatever tax we are paying under RCM, that also will take it as input tax credit and set off the input tax credit. And we all know the manner of utilization of credit. Before utilizing CGST, SGST credit, first we have to utilize IGST credit. And IGST credit is to be utilized first towards output IGST, then balance towards CGST or SGST in any order or any manner. And generally what we do is we split 50-50-50 between CGST and SGST. Manner of utilization of credit. Next point. Gautam Private Limited, Coimbatore, Tamil Nadu, exclusively manufactures and sells product Alpha. which is exempt from GST. That means they are engaged exclusively in exempted product. And the company sells product alpha only within Tamil Nadu, and it is not registered in GST. Very good, of course, nothing wrong, because section 23, my dear friends, if any person is engaged exclusively in exempt supply, registration is not required. Further, all inward supplies of the company are taxable under forward charge. The turnover of the company was 55 lakh, and the company expects sales to grow by 15%. And owing to the growing demand for the product, company decided to increase its production capacity and purchase additional machinery on 1st of July. And the price is 30 lakh exclusive of GST. However, with effect from 1st November, exemption was withdrawn. Oh my God! Exempted product has become taxable and 12% GST was imposed. And the turnover of the company for the half year ended on 30th September was 60 lakh. And the board of directors wants to know whether they have to register under GST after withdrawal of exemption notification. Of course, my dear friends, as per section 22, any person, if his aggregate turnover exceeds 20 lakh, he is liable to be registered, my dear friends, and he has to apply for registration within 30 days from the date he is liable. So here, once exemption is withdrawn, he has to take the registration within 30 days. And in the above question, Gautam Private Limited, if they are assuming like this, is already registered with respect to certain taxable supplies made by it, along with manufacture of exempt product alpha, and other facts are remaining same. Can it take ITC on additional machinery purchased exclusively for manufacturing alpha? If yes, then when and how much? Answer is yes. And how much, my dear friends? We'll apply provisions of section 18(1)(d). In case of a registered person, if exempt supply has become taxable supply, in that case, we can claim credit on two things. Number one, inputs held in stock, inputs contained in semi-finished or finished goods in stock. Number two, ITC on capital goods also can be claimed. But the ITC on capital goods is reduced by 5% per quarter or part thereof. Here, what is a capital good? What is the value? 30 lakh rupees. 18% is 5,40,000. From that, we'll reduce 5% per quarter or part thereof. How many quarters are done here? It is from 1st to July, we purchase machine. 1st July, we purchase machine. And November exemption is gone. That means July, August, September. That is one quarter. October is a different quarter altogether. So we'll take it for 2 quarters. So from 5,40,000, we'll reduce 2 quarters. 5%, 2 quarters means 10% will reduce. Clear, friends? And the balance can definitely be taken as input tax credits. There is no doubt in that, my dear friends. And I'm pretty sure we are getting clarity on this point. Very, very interesting question. Next point. Advance ruling once issued. Next question, come on. Cannot be held to be void ab initio under any circumstance. Absolutely false statement. Advance ruling, what we obtain, can definitely be regarded as void ab initio if it is obtained by way of fraud, misrepresentation, or suppression of facts. And this concept is given by section 104. Next question. Patan Vora of Pune enters into agreement to sell goods to Sukumar Enterprises of UP. While the goods were being packed in Pune godown, Sukumar got an order from Sindhu of Karnataka, Shimoga, Karnataka. And Sukumar agreed to supply the goods to Sindhu and asked Patan to deliver the goods at Shimoga. You are required to determine place of supply. 2 sections will come, 10(1)(a), 10(1)(b). 10(1)(b) because it is a build to ship to model. And in case of build to ship to model, where goods are supplied by supplier to recipient on the instructions of third person. Here, who gave instructions is Sukumar Enterprise gave instructions to Patan Vora to supply it to Sindhu Private Limited. And the place of supply will be location of such third person, which is nothing but UP. So in case of 10(1)(b), place of supply will become UP. And in case of 10(1)(a), movement of goods, place of supply will become Karnataka, where movement of goods terminates for delivery to the recipients. So we have to write here both sections, 10(1)(a) also, 10(1)(b) also. Next question. Come on, guys. Briefly explain the applicability of GST on application fee charge for the entrance or the fee charge for issuance of eligibility certificate for admission or for issuance of migration certificate by education institution. So service provided by education institution to students, faculty, and staff is exempt, including the application fee charge for conduct of entrance examination, and also for issuance of eligibility certificate or for migration certificate. That services are fully exempt. There is no doubt in that. Next. Monty Limited entered into high sea sale transaction with Fuji Limited for certain goods. And they wanted to understand taxability of high sea sales under GST law. Under GST law, it is neither regarded as supply of goods nor regarded as supply of service. Where there is a transaction of sale of the goods, when the goods were in transit, we call it as high sea sales. And it is neither regarded as supply of goods nor regarded as supply of service. That point is covered in Schedule 3. So GST will not apply. But definitely customs will come into picture. Customs duty will come into picture, and we will see the last sale price by the last person who is going to file a bill of entry and clear the goods. At what price that transaction is done, that price is considered. So that means if A has imported the goods at a value of 1,50,000, and then high sea sale A has done to B at 1,80,000. Now B is going to file bill of entry and go to the port and take the goods. Then in that case, customs duty will apply on 1,80,000. That is the last price paid by the last buyer. Next point. Discuss the precautions to be observed while issuing summon under GST law. Very simple. They should not waste time of the person and ensure that they have to summon only when it is absolutely necessary, and ensure that the summon is being made during working hours, and they should not make the person wait for the purpose of personal hearing. Like this, you write the points, you'll get your scores. Next. Ampine Limited imported a machine from UK in April. Details are as under. FOB value of the machine is UK 9,800 pounds. Air freight 3,000 pounds. If it is air freight, we will take actual freight or 20% of FOB, whichever is lower. And the license fee buyer was required to pay in UK 600 pounds. That will add it first. Buying commission paid in India is ignored. Any commission brokerage is considered except buying commission. And the date of filing bill of entry was 20th April. And exchange rate notified by CBIC is 99 per pound. That day we will take the exchange rate. And the rate of BCD is 7.5%. And the date of arrival of aircraft is 25th April. And the exchange rate is 98.5. That is irrelevant for us. And BCD is 10%. For the purpose of exchange rate, we will take on the date of filing bill of entry. But for the purpose of BCD rate, we will see the date of arrival of aircraft or a date of filing bill of entry, whichever is later, which is nothing but 25th April. So I'll take the BCD rate as 10% and I'll take exchange rate as 99 per pound. IGST 12%, ignore compensation cess. We know how to calculate it. Insurance premium not available. Insurance is not available means what will you take as insurance? 1.125% of FOB. And for air freight, you take actual freight or 20% of FOB, whichever is lower. And for calculating FOB itself, you please add license fee starting itself. So we'll take FOB value, we will add license fee, then we will get FOB as per customs. To that we'll add insurance, to that we'll add freight. Then we'll charge, then we will convert that using 99 per pound. Then we'll charge BCD at 10%. Then we'll add social welfare surcharge at 10% of BCD. Then we take total. On the total, we'll charge IGST. That's it. Next point. Question number 19. After visiting USA for a month, Mrs. and Mr. Rajesh Jain, Indian resident, aged 35 and 40 respectively, brought to India. They are coming from US, not from Nepal, Bhutan, Myanmar. They brought one laptop computer. Laptop computer, no duty at all. One laptop computer is exempt. And my general free allowance of 50,000, we cannot combine for both passengers. You're getting one point? That is separately, my dear friends, and that can one person free baggage of general free allowance cannot be combined with another person. Used personal effect 220 is not taxable. So basically, if a person is coming from USA, used personal effects, and also, my dear friends, there is a general free allowance up to value of 50,000 rupees. And one laptop computer is anyways not taxable. And they brought one personal computer for 65,000. From 65,000, we'll reduce general free allowance of 50,000 and the balance value will become 15,000. On 15,000, we will charge customs duty at the rate of 38.5%. Because in case of baggage, the rate of customs duty is 35% plus 10% social welfare surcharge. 35 plus 10% is 38.5%. Getting clarity, everybody? Everyone? Got it. And finally, 20th question, my dear friends, the last question. briefly explain the duties which are exempted in case of imports under advance authorization. If a person is doing imports under advance authorization, my dear friends, there is an exemption for basic customs duty, additional customs duty, social welfare surcharge, anti-dumping duty, anti-subsidy duty, safeguard duty. All these duties are exempt in case where imports are made under advance authorization. And this exemption is not just for exports, this is also given for deemed exports. Clear, my dear friends? Generally, from foreign trade policy, one question keeps coming in the exam for 4 to 5 marks. And not that FTP 2023, which has come up now, is something very new as such. Whatever is there in the old FTP, almost entire content is same, subject to 1 to 2 small changes, what I discussed with you today. Make sense, guys? That's it. That is an interesting story of this CA final RTP with respect to indirect tax laws for November 2023 attempt, which I wanted to spend some good time with you so that you are very clear and geared up for November 23 exam. So with this, my dear friends, we'll complete this session and I wish you all the very, very best and wish you all success, my dear friends. And do come out with flying colors. Any doubt up to the examination date, we are there for your support. And any doubts, feel free to get back, my dear friends. Any query what you have got, feel free to comment, feel free to post on forums, and we'll be more than happy to reply to your queries. Thank you so very much, my dear friends. Shivateja signing off. Thank you so much. Take care. Bye-bye. All the very best. Wish you all success.